On today's episode, we are going to take a look at two businesses. We're going to look at Facebook and Google. Both of them are down pretty big at the end of this week. So in today's episode, I'm pretty much going to break down what happened and why these two businesses saw a huge decline in stock price. And then I'm going to go and talk about why I'm sort of bullish in both these guys and why I'm going to continue to buy both of them. Alright, so first let's take a look at Facebook. Facebook ended the day at 8% down, and after hours is actually down another 1.66%. And so after hours prices right now is sitting at $212. So if we take a look at the stock price compared to February 20th, when the market pretty much started tanking, and it's what I've been using as a baseline right now, the stock price is actually kind of flat, and February 20th stock price was $214. It did peak somewhere about 12-13% higher, but since recent news, now it is sitting at about flat levels. Google, on the other hand, has dropped 5% at the end. It's sitting at about $1,362 at the moment. And compared to February 20th, this company is down 10% compared to where it was at in February 20th. So both of these Google has actually not even gone back up to its all-time highs, and Facebook is now pretty much flatlined to where it was at in February. So why have these companies, first let's just take a look at the overview of why they have dropped since February 20th. Both Facebook and Google make most of their money through advertisement, right? If you have other businesses advertised through Facebook via Facebook ads, Instagram ads, and in Google you have YouTube ads, Google search engine ads, and all other types of Google engines that promote their ads. So that's where Google and Facebook make most of their money. So with the whole COVID-19, the number one thing that other businesses stop first to help conserve cash is marketing, which to me I think is pretty weird, right? During hard times, I feel like you would want to market more so you can make sure to sell more. But I guess the expectation is that people are not looking for items at the moment. They're only looking for essentials. So even if they advertise more, they're not going to see an increase in overall consumer spend, which makes sense. So with stuff like this, drove both these to drop down in price during the whole COVID-19. This recent drop is not due to COVID-19. I want to say that this recent drop that we saw this past Friday was because Facebook, Twitter also saw a similar 7% drop, but a lot of companies are pulling advertisement out of Facebook for the full month of July. I'm not going to get here for any political reasons, but just that right now other businesses do not believe that Facebook is doing the right thing. Again, this is not a political show, so we're not going to discuss things, but for those reasons, they are pulling out of Facebook. I do believe the reason Twitter and Google are down as well are just because a lot of investors do believe that many of these businesses that are pulling out of Facebook are just using this Facebook boycott as a way to just expand themselves and to be more known to others, right? It's more of also a media stunt to get more viewerships to them. But a lot of investors, especially strong investors that I have followed, believe that most of these companies were already going to pull advertisement, but right now they're gonna look like the good guys by saying that they're boycotting Facebook for the full month of July. But in reality, most of them were most likely just going to save money right now due to the current situation of the market. Because of that reason, investors also believe that Google and Twitter, let's just take a quick look at Twitter stock real quick. Twitter stock, the price drop has seen about 7.4%, so very similar to a Facebook drop. And Google, like I mentioned, is down close to 6%. So all these businesses, all these stocks that make most of their money through advertisement have seen a huge decrease in price. Again, The reason I did not talk about Twitter, even though it is in the same sector, is because Google and Facebook, I believe, are in markets where they can continue to grow even without the advertisement. But I do think that this whole advertisement is just being blown out of proportion, and I'm gonna talk about why. And before we go any further, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly appreciate the support. And if you guys ever want to get in contact with me, I'm very active in the YouTube comments, but I'm very active on Twitter as well. And I do have a Discord channel, which is free to all members. So feel free to join. And there's a lot of great investors in there just discussing ideas. Finally, on the comments below, let me know, what are your thoughts of Facebook and Google at the moment right now? Are you guys waiting? Are you guys buying right now? Feel free to share. All right, so now let's just take a quick look at some of the businesses that are pulled out from Facebook on Friday. And yes, it is a huge number. And like I said, the headlines are making it seem really bad, and I do think it's gonna give me a buying opportunity. For example, one of the other businesses that are pulling out of Facebook is Verizon. And let's just take out of Verizon. Verizon is no longer gonna be advertising in Facebook or in Instagram or any of other Facebook methods. So here we have it that Verizon spends $1.9 million a month on advertisement. People might go like, that's some crazy number. So around a year, you can say it's around $23 million or so a year. And people are like, wow, 23 million. This is definitely gonna hit Facebook hard. But this is a big company, right? A big company like Verizon is spending $23 million on Facebook a year. Facebook advertisement from Facebook's revenue from advertisement is $73.4 billion. Let me say that, $73.4 billion. So that $23 million out of $73.4 billion is pretty much nothing. Obviously, the overall relations might be worth more than the monetary value, but I do think a lot of this is overreaction. And again, I am not a professional, and this is just all my opinion. So take my words as with a grain of rice, right? This is just how I see it from my eyes. And also, there are two types of boycotts happening right now. There are some businesses that are canceling Facebook ads just for the month of July, and then there are others that are saying that they're boycotting Facebook indefinitely. Verizon was one that is doing it indefinitely. For example, there have been some that are doing it till the end of July. We have seen companies like North Face, Ben & Jerry's, Magnolia Pictures. I know I have a lot more. Let's just take a look at them. One of the biggest ones that's doing it indefinitely right now is Unilever, and Unilever right now is one of the biggest advertisers, and they own more than 400 brands, including Dove, Hellmann's, Lipton, Axe and Lynx. So these are 400 brands, but if we take a look at how much money even the biggest brand, one of those biggest brands is, you can see how at the end of the day, I still believe it's more of an overreaction. So in 2019, Unilever was the 30th spender on Facebook advertising platform, coming in at $42 million for the year. Remember, 42 million. So 42 million, and then you take a look at Facebook's revenue of about $74 billion. You can see how small things like this are coming. And I do believe there are going to be others boycotting, and more other companies are going to come and try to grab these cheap ads at a better value now that they have less competition. So again, I can see why the stock price, especially with all the news going on right now, can worry some investors. But to me, I'm definitely going to take this time to add more shares. Another big one, we're going to see Coca-Cola is pausing for the 30 days. Levi, Dockers, they would pause advertisement and on Facebook and Instagram for at least the end of July. And like I mentioned, a lot of investors are saying that this is probably also due to the fact that most of these companies were going to slow down some form of advertisement to reduce costs. But right now, it's a perfect way to actually seem like the good guy. All right, so now that we understand why the stock prices have dropped for all of them and why it's mainly affecting Facebook, I want to take a look at Google. So Google did see about a 6% drop, and again, the main reason I believe this drop happened is just because investors are seeing more of a weakness in the overall advertisement business, not just on Facebook. Here I pulled up Google's most recent earnings, and we can kind of see here that Google's total revenue for the most recent quarter was $36 billion. This isn't just the most recent quarter. So out of this $36 billion, about 30 billion of that 36, so close to 80, a little bit over 80% comes from advertisement. The other 18% comes from other Google revenues, mainly Google Cloud and Google Other. Google Others are anything other and any other main Google, like Google Homes or any other big things that Google owns that is not part of advertisement. And this is one reason I am very bullish in Google. They are very spread out, and they're trying to expand. And again, I'm very bullish in Google Cloud, and just the other stuff they are expanding on, I think, is very impressive for this business. So another one of my favorite things about Google is YouTube. YouTube, they are expanding in the just YouTube in general, I think, is amazing, but YouTube is also expanding in the esports realm right now with YouTube gaming, and also with Google Cloud gaming, which I think is going to be such a great thing with Google Stadia. So I pretty much just Googled Google. That's crazy when you Googled Google, but there's so many things that Google has done recently. Google has now, in June 26, there has been announcement that Google is to invest up to $2 billion in Poland to expand its cloud footprints. Cloud is one of the biggest markets right now, where we have competitions with Amazon, Microsoft, IBM, Alibaba. And just to continue to see this investment expansion, I think is a very strong move. The second thing is, this is for you to expand in the cloud servers, you need to build data centers, right? So it's not like that cloud information goes into some form of supercomputer, you can say, and these are where these data centers are being built. So another thing that I want to mention here is, now knowing that there's huge expansions going on with other companies like Google, Microsoft, Amazon, it is also good to keep in mind those companies that provide the technology to expand these sensors. For example, Nvidia, AMD, Intel Corporations, Micron Technologies. These are the ones providing the components to build these expanded data centers. So those are other ones I just wanted to mention if you guys are a little bit curious in the clouding world and what I'm pretty bullish on. Those are all companies I am very, very bullish on. Next, like I said, there's in so many recent news, Alphabet, so Google's head company, they have other bets. So if you guys don't know about Google, they have a lot of miniature companies that they have bought out that all are dealing with some form of crazy technology, and the expectation is that eventually one of those is gonna blow up and do amazing. So Alphabet owns this small company called Waymo, which deals with more like self-driving cars, and they have partnered with Volvo to make a deal to develop robo-taxis. And this is not the first deal that Waymo has. Waymo has plenty of deals with Fiat to place its self-driving systems in minivans. They also have other ones with Nissan and Renault. So all other companies that Waymo, what is it called? Waymo is working with. So again, I just want to show the different markets that Google is in, so people can understand that Google is not just an advertisement business. For example, here 24 hours ago, so on Friday, Google's parent Alphabet is reportedly in the final stages to buy smart glasses maker North as the augmented reality race with Apple heats up. So this is crazy. They are competing with Apple in smart glasses, and again, we can see this technology getting built up. And when you have competition with two big companies like this, it's definitely gonna be great for us consumer, because we're gonna end up with amazing products. All right, so now that we took a quick overview of Google and everything they're doing and the reasons I'm buying Google, I want to take a look at Facebook next. So Facebook has taken a big drop, and I am definitely going to take advantage of this. Unfortunately, I don't have unlimited capital, so as my money comes in every Friday due to my paycheck, that's what I'm going to be buying. So the reasons I'm bullish on Facebook, I mentioned, right? The first thing is, I do think this advertisement thing has been more of an overreaction thanks to the news articles. Again, thank you for providing me with the ability to grab cheaper shares. Facebook is more than just a media company as well. They are expanding into different sectors, which I am very bullish on. For example, Microsoft has recently closed down Mixer, which was their esports streaming device, streaming service, very similar to Twitch if you guys know about streaming services. And now they have partnered up with Facebook and kind of combined that mixer into Facebook Gaming, which I think is going to help Facebook Gaming grow even faster. And Facebook Gaming is one that has actually been, even though both YouTube Gaming and Facebook Gaming are very small compared to Twitch, both of them are actually growing at a strong level. So I am bullish for that sector. Some other reasons why I'm bullish on Facebook is they are in many esports sectors. For example, they are in the virtual reality world. In the virtual reality world, it can be outside of just esports, but I do think just by developing the technology in the esports realm, they can start to use that technology in other types of businesses. Facebook has their Oculus Rift, which is another amazing platform. Continuing with the gaming push, they actually just bought another gaming studio. They bought up what's this company called, Ready at Dawn, which is the video game studio which is responsible for some really big names, for example Lone Echo and Order 1886. And they're gonna be using Ready at Dawn to release more virtual reality platforms for Oculus. Again, they are finding different markets that they're trying to expand in, and they're continuing to grow. And we're gonna see esports is one of them, gaming, which coincides with esports. The next we're gonna see is some form of e-commerce and e-payments. All three of these I would consider esports and gaming as one. E-payments and e-commerce are ones that are growing dramatically right now, and these are the ones Facebook is pushing hard to get into. For example, Facebook, if you guys did not know, Facebook just took a huge step towards monetizing WhatsApp. So now, if you guys have, for example, if you guys have used Venmo, you have used PayPal, there's a lot of e-payment type applications out right now, and WhatsApp is now you're able to use your WhatsApp account to send money to other people. And you can, right now this is only available in Brazil, but Brazil is their number 2 biggest user base of WhatsApp. And I think this is actually a pretty impressive move. Once we get it here in United States, for me personally, I do most of my communication, even with friends here in the United States, with WhatsApp. So I'll most likely be using this. And this service is built in onto Facebook Pay, which is already being used in different platforms. And they're developing everything around this Facebook Pay. And the way they make money out of this is just like every other application that does this. If you're a consumer, a regular people to peer-to-peer payments don't have a fee, but let's say you're buying an item, there is some form of charge based on that item cost. And like I mentioned, Facebook is also moving into the e-commerce world. They're doing checkouts on Instagram right now, and they have just partnered with Shopify to increase their overall platform for shops on Facebook, which has been another strong move that recently happened. And they're gonna all be involved with Facebook Pay. So it's not like Facebook it's creating some form of new application to do this e-payment thing with WhatsApp. It's something that has already been created, and now they're using all their platforms to use it. So again, I think Facebook is going in the right direction. Again, another thing I want to mention is Facebook is pretty big right now in acquiring a nice amount of companies. Like I mentioned, they acquired a lot of gaming companies. They actually even acquired a mapping company. They acquired a Swedish mapping applications to help build up their overall mapping. But we can see Facebook right now is really trying to be like a Google, where Google is using acquisitions to get it in front of the technology. There's no point for companies that have big amount of cash like Google and Facebook to go and start new small businesses. For them, what they should do is, once there has been some form of development process and it shows that, hey, this does work, they bring the cash and be like, okay, here, we'll buy you out for this much money. And that's what Facebook is doing, and Google is doing it. Facebook right now has about 50 billion in cash. They have really strong balance sheet. Both Google and Facebook both make tons of money. They're generating tens of billions of dollars a year, and they have very low debt, and they have high cash. So these are two companies, again, that I am very bullish on. Another acquisition that Facebook has just done is Facebook and PayPal both invest in Indonesia's Gojek. Gojek is pretty much the Indonesian delivery and digital payment company. And this allows Facebook to enter a market they're not in right now, which is the South Asia region. All right, so now that we took a look at why I'm bullish on both Google and Facebook, I wanted to take a look at their valuation. When I take a look at valuation, it depends on what kind of state the business is currently at to determine if I should do a forward price to sales ratio or forward PE ratio to do my valuation. Both Google and Facebook are very developed companies that I believe I have a better view of them by doing a forward PE ratio. So Facebook right now for December 2021 has a forward PE ratio of 22.46. If we take a look at Google at the moment has a forward PE ratio of 2021 of 24.8. So people are saying that right now Google is a little bit more expensive than Facebook. I do think both of them are actually pretty well valued. Let's take a look at a big juggernaut like Microsoft, and I do think Facebook and Google could be comparable to Microsoft. I do think Microsoft has a little bit more lead in the clouding server. So look, a forward PE ratio for Microsoft for 2021 is 31.53. So both and let's take a look at Apple. Apple is one that I think I would consider Facebook and Amazon and Google a bit better than Apple. This is just my opinion. But look, Apple right now has a forward PE ratio of 23.86. So I do think Facebook and Google right now are undervalued. Maybe not undervalued, but they are in response to this up, but they are undervalued compared to the overall market, especially the type of growth that both of them are expected to see. So those are the main reasons I am going to continue to buy on Facebook and I am going to continue to buy on Google. I do want these to both be very big portions of my portfolio, at least 10% of my portfolio size. So like I said, I don't have unlimited funds. Every week I do get funds. So as those week continues, and if I do get these great stock prices, I am going to continue to buy both of them. So now the final thing is I wanted to mention two companies that might be worth taking a look due to this whole advertisement business. The first is Trade Desk. I did do a video on Trade Desk, actually on both of them. I did a video on Trade Desk and Digital Turbine. So if people are pulling out of Facebook, most of these companies, if they have still money to go, they're gonna need to put it in somewhere else. Those other two that have the potential to receive these customers would be Trade Desk and Digital Turbine, which do advertisement in different platforms. For example, TV streaming, radio streaming, audio streaming, all types of other advertisement that Facebook and Google are not in. They do TikTok, for example. So if you guys believe that they are really moving out of Facebook due to the negative reasons and they're just moving their money elsewhere, I would recommend trying to take a look at my other video where I talk about Trade Desk and apps. Both are another digital type companies. So that's it for today's episode, guys. I hope you all enjoy it. Take care, have a good night, and see you next time.